Well, hello and welcome, everybody. My name is Christian Sadler, CEO here with PREIshare, and we have a special webinar for you guys here tonight with the latest offering from RSN Property Group. And we have Ben Gray and Reed Goosens with us. Now, one of the things I've only been in this world of real estate syndication for about 3 years now. I've been in real estate investing for over 20, but I was pulled into this world and surrounded by people who have been doing big projects for a long time. And one of the things that I have been so impressed with you two is your consistency. Ever since we've met, you've always had the next project coming up, and you guys, get these properties done. You have a very down-packed system for the way that you find properties, analyze properties, purchase those properties, and turn them around. You have a great rebranding strategy. I'm just so impressed the more that I watch you guys operate in this amazing ecosystem. So I don't want to take any time here. I will say that, we've been able to represent you guys from a marketing perspective. So if you guys are joining this webinar, we don't officially endorse RSN Property Group legally. That's not something that we would do, is endorse any specific sponsor. But I can say that I look up to these guys in what they do in the market. And we're excited every time we see a new listing from them, a new project that's coming across, because it's a great opportunity for investors to get involved in commercial real estate in the multifamily game and leverage really the hard work of you and your team and the systems that you guys have built. So thank you guys for being here. First of all, what I'm going to do is I'm just going to let you guys run with it, share with us this newest project, and give us all the details, all the goods. And then at the end, if there's any questions, let's open it up and take those questions from there. So with that, Ben, I guess we'll give it to you, or should I give it to Reed?
Reed loves to talk. Give it to Reed.
All right, Reed.
Thank you, Christian. And hello, everyone. Great to be back on the platform here with PREIshare. And, we've been really impressed with how your platform that you're building as well. It's going from strength to strength. So, Ben, quick introduction on who we are. My name is Reed Goosens. I'm the CEO and founder here at RSN Property Group. Ben, do you want to say a quick hello to everyone?
Yeah, hey guys, Ben Gray. I'm the CEO and partner here at RSN Property Group, and I'll go ahead and share the presentation, and we can talk and look at the slides at the same time.
Yeah, and so look, over the next 30 minutes, guys, we're going to share with you a comprehensive look at our latest offering, an institutional quality multifamily asset currently known as Audubon Crest, and it's going to be immediately rebranded to Alessia Gardens. Now, beyond that, I want to introduce you to the real opportunity behind multifamily value-add investing, a method that we have employed repeatedly to generate around an average of about 27% annualized returns over the past 10 years to our investors. Now, we are pleased to report that we've been given our webinar structure. It's a bit of a revamp and based on the feedback from our investors. So hopefully we've simplified it for you guys, the presentation. We've shortened it down to a little bit. And as Christian mentioned, we are going to do a time for Q&A at the end. But here's what we're going to cover on tonight's webinar. So we're going to start out by outlining why right now we think is a generational buying opportunity as we enter a commercial real estate growth cycle. We'll also cover RSN's experience as operators and our track record. We'll tell you a little bit about the multifamily investment strategy that we'd like to employ. We'll talk about the market of Atlanta and the Gainesville submarket where this asset is located. We'll talk about the meat and potatoes of Alessia Gardens itself. We'll introduce you to our business plan, the fantastic returns we are projecting on this, and we'll touch a little bit on the tax benefits and cover the next steps. And after that first 30 minutes or so of presentations, we're going to go across and do live Q&A. So before we do that, a bit of a disclaimer. We want to flash this up on the screen for all of you. We're not going to go into this too deeply, but please, we encourage you to read it or pause the webinar and read it at your discretion. Now, if at any time over this webinar you want to have you have a question, please put it in the Q&A chat box below. Now, and if at any time you'd like to register your investment, you can do so by heading over to rsnpropertygroup.com/commit. If you'd like to schedule a meeting with us, to discuss this further, please do so. You can do it on one-on-one setting. You can use that QR code on the screen, or you can head over to www.rsnpropertygroup.com/ call, C-A-L-L, to schedule a call at a time that is convenient for you. Or you can just email our account executive, Willie Morales, which the email you see on the screen. Now, Ben, I'm going to hand it over to you to talk a little bit about why we think this is a generational buying opportunity.
Fantastic. Thanks, Reid. And guys, we're going to start big picture and point out that right now is what we believe to be a generational buying opportunity in the multifamily space. As you probably know, the US faced record-breaking inflation in the wake of COVID, and the Federal Reserve responded by raising interest rates faster and higher than any other time in modern history. And this absolutely crushed the commercial real estate market, with monthly mortgage payments skyrocketing and valuations plummeting. In fact, prices for multifamily apartments have fallen more today than during the 2008 global financial crisis. The good news is that markets have stabilized since then. I'll jump to my next slide here. And the fundamentals behind multifamily are stronger than ever. People need a place to live. Shelter is a human necessity, just like food and water, and housing affordability is the worst it's been in over 4 decades. Prices are higher than ever, and the unfortunate truth is that the American dream of owning a home is dying, and for better or worse, America is going to be like Europe and other parts of the world where people are forced to rent. The real issue underpinning multifamily fundamentals is that there's a shortage of housing in America to the tune of millions of houses. And not only are we not catching up by building enough houses, we're actually going backward, and the shortage gets worse every year. Combine this with attitude shifts in America, where owning a big house in the suburbs is often counterintuitive to a new generation who prefer to live in cities closer to workplaces, entertainment, recreation, and all of this pushes up demand for rental properties and rents in general. More broadly, the Federal Reserve began a rate cutting cycle in August of last year, and we're looking at a soft landing scenario with the economy strong, stocks booming, real estate booming, and multifamily valuations ticking up and moving into a new growth cycle. And don't just take our word for it. The institutional world has taken notice, and they're putting their money where their mouth is, investing billions upon billions right now, buying multifamily assets hand over fist at rock bottom prices. Now, we're no Blackstone, but we're no slouches. Over the last 10 years, we've acquired almost $1 billion worth of multifamily assets. That's 27 properties and more than 5,000 units across 5 MSAs. And we plan to acquire another $150 million worth this year alone to capitalize on this generational buying opportunity. Now, the last thing I will say here is that over all of these properties for the last 10 years, we've been executing the same value-add investment strategy on rinse and repeat. We're very niche and specialized in that regard, and I think this is what Christian was speaking to. And our 3R strategy is very simple. We come in and we rebrand, we renovate, we recapture value. And at this point, we're exceptionally good at it, to the point that it's becoming a little bit boring, but it's incredibly effective at generating excellent investor returns. And we're going to touch on this in more detail later in the webinar. But by using this strategy, we drastically force asset price appreciation, not just relying on market appreciation. And our experience and investment strategy is reflected in our track record. While we generally aim to produce a roughly 20% annualized return to investors, we've managed to achieve a 27% annualized return on the deals we've gone full cycle on. And that's before you even factor in the boost most of our investors get from the tax benefits inherent to real estate investing. 27% is already a pretty robust return, but when you factor in depreciation, bonus depreciation, cost segregations, and more, the effective yield can climb even higher. And I will quickly point out here, we even cycled an asset just a few weeks ago in 2025 here, and we still got great returns on that. So it's really nice to be cycling assets again after the tough market conditions of the last couple of years. And with that, I will pass it over to Reid. Oh, you're on mute, buddy.
Sorry about that. So now we're going to talk a little bit about the team and who behind drives us here. So as I mentioned earlier, my name is Reid Goossens, and I'm the CEO and founder of RSN Property Group. And I moved to the US well over a decade ago, back in 2012. And at the time, I was chasing my girlfriend, who is now my wife. All those good stories come to a good ending. I came here really with nothing except a chartered engineering degree. And I bought my first deal for $30,000 in Syracuse in upstate New York. where I used to catch the bus from New York Penn Station up there on weekends to check out properties. And obviously a lot has happened over the past 10 years, but my focus here at RSN is purely on acquisitions, asset management, and construction management. Now, Ben, who you've just met, he is my business partner, and he has a similar background story to me, arriving here in the US back in 2010 with a 6-month job contract, a few $1,000 in his account, and a 3-night booking at a hotel. And he met his now wife within weekends or within weeks of landing here in the US. And he's had a very successful career in tech business, and he's also been successful in the real estate downturn and capitalized on that after the 2008 global financial crisis. And he's primarily focused on everything equity related here at RSN, including investor relations. Now, Christian Macellari is our head of acquisitions and capital markets guru. He is pretty much the sole reason we've got this deal sitting in front of us tonight. It's an off-market opportunity like Alessia Gardens, and he's supported by a big team of analysts with AJ and a couple of other analysts that support him. We have Mary, our fractional CFO. Josh Oaten heads up our asset management team. And as investors, you'll be interacting with Patrice, our head of investor relations, and Willie Molares, who is our dedicated account representative. Now, obviously, we have a bigger team behind the scenes that contributes to our success and drives investor returns forward. Now, we're going to quickly touch a little bit here on one of our strategic partners involved in this deal. And in terms of the partnership, we're pleased to be partnering up again with Monday Properties. Now, Monday is institutional quality operator. They are partnering up with us. We are the operating partner in this deal, but they're bringing some equity to the table. They're bringing the expertise. We just partnered up. This will be our 3rd deal partnering with them. So they are a strategic partnership within RSN as we grow. They have over $16 billion worth of assets under management today. And they have primarily been in the office and multifamily ground-up construction space in the greater DC and New York area, but they've started to create an arm of buying existing multifamily assets, as they think, like we do, it's a generational buying opportunity. They have earmarked us at RSN as strategic partners to help grow their platform. They do not have that platform currently, and we are those. We bring them deals to help fund those deals, and they come along for the ride. So anything you want to add there about Monday, Ben?
Yeah, no, look, I would just say Monday have been around for a good long stretch. We love having them as a partner. There are no slouches in the multifamily space. You know, they've got 6,700 multifamily units that they either own and operate or under construction. And just a minor thing, it's not 16 billion under management, it's 16 billion of capital invested. Still a really impressive number. Impressive number, but I don't want to misrepresent anything. But no, we're thrilled to have them on board. It's great to have someone with all of the expertise and capabilities that they bring backing this project and just making it a stronger project. But with that, let's move it along here.
And just to reiterate, RSN is the lead sponsor on this deal. So just wanted to make that very, very clear. So let's talk about deal sourcing and our market selection. And you know a bit about our background now. So we specifically want to talk about our disciplined and structured process to bringing fantastic opportunities to you guys like Alessia Gardens. Now, to deliver consistent risk-adjusted returns for investors, we start by systematically identifying the strongest growth markets across the United States. Now, we focus primarily, obviously, on the price through our 3R value-add business plan. It's equally as important to capitalize on market appreciation by acquiring assets in stable, high-growth markets. Now, this double whammy of forced appreciation and market appreciation is what drives the outsized returns that we've been able to achieve on our assets to date. Now, to systematically identify the most opportune markets in the United States, we take a data-driven approach by looking at things, including strong GDP growth, population growth. A market like Atlanta is the second strongest GDP growth and population growth in the country for over a decade. It's a prime example of why we're choosing to invest in this market. We also like to look at a stabilized, diverse local economy. We do not want to be buying in a city where there's one large employer in town who may face hardship or go out of business, or a place like Detroit back in the day with its overdependence in the auto industry, or even maybe like a modern day San Francisco with its plummeting real estate market reeling from its overdependence in the tech industry as certain tech giants move out of California. Now, we look deeply in the rental markets within each MSA. We look at occupancy rates, we look at cap rates, we look at employment trends and other data as such. And beyond that, we go into the demographics of the submarket. We look at the crime stats. And we even look at the upcoming economic investment opportunities and initiatives that the local city is looking to implement. Now, as you can see from this image here, we own assets across multiple markets, and we're intending to move into Central Florida later this year with Alessia Gardens being our third acquisitions in the greater Atlanta market. Now, we are thrilled because we see Atlanta as one of those most compelling real estate markets here in the United States. The city's strong economic fundamentals, rapid population growth, its pro-business environment create an ideal setting for long-term investments in our opinion. Now, lastly, as we enter any new MSA, we aim to quickly reach 700 to 1,000 units to rapidly reach economies of scale that aids dramatically with reducing operational expenditure. We can do bulk ordering in terms of material supplies. We can share staff across multiple assets, and obviously much, much more that goes into those economies of scale. Now, with this being our third acquisition in the market, we've already seen those synergies and cost reductions play out that will improve as we continue to expand our footprint here in this MSA. Now, in terms of deal sourcing, within our target MSAs, we have strict property criteria, including purchase price, vintage, and unit count, submarket location, and obviously other criteria that we strictly must adhere to. Additionally, we look at income levels. These are very, very important within the immediate area surrounding each property. The demographics and the local amenities really play a massive factor into why we choose certain assets. Now, let's talk about the big thing that is identifying properties with ample value add opportunities. And by this, we're talking about units that have not been updated for a number of years, units that we can add washer dryers to, or washer dryer hookups to, or we can add an extra bedroom. We could potentially blow out walls between the kitchen and the living space, really opening up the unit to feel like a home. Then we look at the common areas, or old amenities on site, properties where we can add a gym, properties where the pool is tired or outdated or unused, any unused outdoor space that can be transformed into, a pickleball court or a dog park. Anything that dramatically enhances the community to increase the desirability of the property to attract better tenants, higher paying renter tenants, and just a better tenant profile is what we're focused on. All of these things increase the value of the property through that forced appreciation we spoke earlier about. Now, with all of that criteria in mind, we actually review over 500 deals per year, and we systematically siphon through them to ultimately only close on between 3 to 6 assets a year. And that's our goal. We don't want to be too far out of our skis. We want sustainable growth at RSN. Now, these are one of the deals that we're presenting to you guys right now. So now you understand how we identify these properties. We want to present the investment opportunity, and let's talk about the Atlanta market. I'm going to hand it back over to Ben. Ben, you're now on mute yourself, mate.
I don't know why we're rookies tonight, Reid, but hey. Look, guys, you've seen the headlines about massive migration from states like California, Illinois, and New York to the Sun Belt. While Texas and Florida often get the spotlight, Atlanta has been one of the biggest beneficiaries of this trend, attracting both residents and businesses at an unprecedented rate. Population growth is the single most important driver of any real estate market, and Atlanta's numbers speak for themselves. The metro area has a population of approximately 6.3, making it the 8th largest MSA in the USA. And from 2010 to 2020, the region experienced nearly 16% population growth, and that momentum has continued while older urban centers like LA, Chicago, New York saw population declines. Now, from a real estate investor's perspective, this is a textbook case of supply and demand. More people and more jobs fuel housing demand, which in turn drives rental growth and occupancy rates. Atlanta consistently ranks among the top cities for job growth and business expansion thanks to its diverse economy, strong infrastructure, pro-business environment. In 2023, Atlanta recorded 3.1% year-over-year employment increase, making it one of the fastest growing markets in the country. And major employers like Microsoft, Google, and Visa have expanded their presence in the city, reinforcing Atlanta's status as a corporate hub of the Southeast. And Atlanta's economy reflects this dynamism. The metro GDP reached $473 billion in 2022, a significant jump from around $385 billion just a few years earlier. Among the top 10 largest US metros, Atlanta ranks second in GDP growth, outpacing national averages and highlighting its long-term economic strength. The takeaway, Atlanta is one of the most desirable high-growth investment markets in the US, offering strong fundamentals, sustained demand, and significant upside potential for real estate investors. Gainesville, Georgia is a prime destination. It's our submarket that we're in, and it's a prime destination for residents and investors, combining economic strength, affordability, and proximity to Atlanta. As part of the Atlanta CSA, it offers big city opportunities while maintaining a suburban feel with affordable housing, great schools, and a thriving local economy. For investors, Gainesville presents strong fundamentals. While population growth has been in line with the Atlanta MSA, rental rates have outpaced, surging 35% in 5 years. Home values have nearly doubled in a decade, and employment growth, led by major employers like Northeast Georgia Health System and Amazon, remains steady. With 45% GDP increase since 2010 and ongoing infrastructure improvements, demand for quality housing continues to rise. Gainesville offers a rare combination of stability and growth, making it a top-tier real estate investment market. And with all of that said, now you understand that we're in a generational buying opportunity in the multifamily market cycle. You know about RSN's experience, our track record of investor returns, our investment strategy, our approach to sourcing the best deals, and why the market is so compelling. Now let's finally jump into Alessia Gardens itself. Take it away, Reid.
Yeah, so guys, this asset is truly a gorgeous boutique rental community. It offers 126 apartment homes in a 2- and 3-story garden style layout. This is actually really beautifully landscaped. It's tree-lined community. Is really designed to enhance the tenant experience. It features an array of really awesome amenities already, such as a dog park and a swimming pool and actually a car wash, which is interesting, and an abundant amount of really green space. It offers unmatched convenience and comfort as well, given its location. It's situated in a prime location in Gainesville. The property benefits from close proximity to top-tier restaurants, shopping, major employers, major highways, recreational parks, and really making it a standout investment opportunity in our opinion. Now, currently, the property is owned by an operator that is facing challenges across their portfolio. In this industry, word travels fast. And when we heard about their situation, we reached out to explore a mutually beneficial opportunity. So the core issue was clear that the owner was just stretched too thin, leading to some operational inefficiencies. And as a result, they have sought to offload select assets in their portfolio to refocus their time and resources. Now, after evaluating their portfolio, we honed in on Alessia Gardens. It's built in 1999. The property is in excellent physical condition. It features the modern infrastructure, fire sprinklers, individual HVAC systems, high-end plumbing and electrical systems. The current owner has actually done a very good job of maintaining this asset. However, since we put it under contract back in October last year, operational performances have declined a little bit, and that doesn't concern us. This is exactly what kind of situation we specialize in terms of turning around assets. But to account for those challenges, we negotiated with the seller to bring in our trusted local property management team, which we've already Alexander Property Management. And after closing on, and so we've brought these guys in before we've actually closed on this asset, which helps us stabilize operations today before that closing at the end of April. And additionally, we're able to negotiate a $500,000 discount off the original purchase price. I will also say that this asset is completely off market. So we found this asset through Christian Machelati. He is our chief investment officer, and so this wasn't blasted across the internet. So we're bringing you guys an opportunity through our deep work in the industry of multifamily investing to provide off-market opportunities like that. So we locked this asset up for an exceptional $21.15 million, a fantastic acquisition in our mind with massive amounts of upside potential. Now, with an incredible, we also want to talk about the basis. So this is an incredible basis that we're picking it up for. We're picking it up for 168K per door, and this represents a 34% discount to comps back at the peak 2021, 2022, which was around $256,000 a door. Now, there's also these units are larger units. The average square foot is 1150, meaning that based on a price per square foot, we're seeing 65% below recent comps. And tenants always love more space, which is good for occupancy and good for rental rates. Now let's pivot and talk a little bit about our business plan. Now, Ben mentioned earlier our 3R value add strategy: rebrand, renovate, and recapture value. This is the foundation of our business plan for every asset we buy. Fortunately, we are starting with a very well-maintained, visibly appealing asset, meaning that we won't face the complexities of a heavy renovation and a deep value add. Instead, we can focus on the strategic upgrades and really the operational efficiencies that we have seen, to maximize that value. In terms of rebranding, we mentioned earlier that the property is going to be rebranded from its current name, which is Audubon Crest, to Alessia Gardens, reinforcing a fresh, modern identity. And we're going to include new signage. We'll revamp the website, enhanced online presence and online marketing. Additionally, we'll refresh the landscaping. We'll repaint select buildings to improve the overall exterior aesthetics, ensuring a real strong first impressions when tenants come across the property line inspecting to looking for a new way to live. And our property management team will be actively engaging in the local community, which is really, really important to highlight the new ownership and the commitment to elevating the living experiences at Alessia Gardens. Now, in terms of renovating, since the property is already in such great condition, our renovations will be targeted on cost-effective, aligning with the market competitors between 100, which current rents are between $150 to $175 higher than our current rents. Now, our interior upgrades will include slight different things: modern backsplashes, updated cabinet pools, updated hardware, providing a fresh look without excessively spending on capital expenditure. Now, in terms of recapturing value, outside of pushing the rents between $100 to $175, operational improvements is our biggest driver of this NOI growth over the next 3 to 5 years. Now, we'll be enhancing our collections. We'll be reducing that bad debt. We'll also be removing non-paying tenants while strengthening marketing efforts and community engagement. Now, expense reduction is also a really big thing, and we'll be initiating that through utility savings initiatives like low-flow toilets, water conservation measures. Those have saved us hundreds of thousands of dollars in our portfolio over the years. Additionally, we'll be introducing premium paid services such as trash valet, in-unit washer dryers. We'll also be creating additional revenue shares, additional revenue generating ideas such as pet yards that people will, on the ground floor units, may pay $60 to $100 depending on having a privatized yard. And so with all of that, those things will be able to really push the needle in terms of NOI. Now, on this slide, you can see that the rental rates achieved by different unit types, noting that the renovations across all unit types are going to be achieving between $100 to $150. Of course, we don't base our business plan on this assumption alone. And you'll see here, we look methodically at the local market, examining the nearby properties for what their unit types and the rents they've been able to achieve. And you'll see that in this, in addition to supporting our assumption that we can get rents between $100 and $150 rent pops on a renovated units, we're actually seeing rents at Alessia Gardens that are well below the wider market. So we could even likely push them higher to maybe even $175 or $200. Particularly when we have a revitalized the entire community and make it more desirable for those current tenants and potentially for those new prospect residents coming to look at living at Alessia Gardens. Now, on that note, you can see here exactly how much we plan to invest into the property in terms of CapEx dollars. As we keep saying that this asset is in excellent condition, hence the CapEx budget is probably roughly half than what we'd normally allocate to an asset of this scale. This includes everything that we've mentioned before, plus things like the new state-of-the-art gym, a fully renovated leasing center to impress prospect tenants, the moment that they come into the property. And we'll add, as I mentioned earlier, pet yards, barbecue areas, refresh the pickleball court, the tennis courts, maybe even turn it into a soccer pitch. We don't know, but a lot of things there that we'll be able to cover with this CapEx budget. Now, I want to remind everyone that we have done this exact value add plan 27 times over the past 10 years. We've learned a lot along this journey, garnered a huge amount of experience. And to be honest, I'm personally really proud of some of the transformations that we've been able to achieve. And I'm really, really passionate about this aspect of what we do as operators. It's special to see, assets that are tired have, a new life breathed back into them to make them look better for the next 20 or 30 years. Now, the same goes for the interior renovations. Now, over the last 10 years, we have renovated thousands of units across the country. We know what works, and we can't wait to come in and really get our hands wrapped around this asset and start renovating those units. Now, in terms of the underwriting and how we've structured it, we're going to close out the business section. We want to speak to that conservatism of that underwriting and how that really underpins the business plan and the way that we structure our deals. So in terms of the debt that we're getting on this property, we are going to be securing a 70% loan to purchase on the property with a fixed rate of 6.25%, interest only for 36 months. Now, we'll have 100% of the CapEx budget available to draw down upon the loan. We have no exit fees. Do we have exit fees on this one, Ben? I think we do. So no exit fees on this one. And we'll be able to maybe potentially look at even exiting this asset at the end of 3 years, or we'll look at to refi it into a permanent loan sooner than 3 years, depending on how we see the transformation of the property. Now, in terms of the capital stack and investor returns, we want to talk about how that impacts you guys, because that's what you're all here to see. Now, in addition to the debt, we have a typical 3 investment classes, allowing investors to allow their dollars with the investment goals and preferences. Now, keep in mind, while you can invest with cash, we also accept self-directed IRAs. If you have any money languishing in a 401k, we can white glove the process as well to help you set up a self-directed IRA to invest in this deal. With no IRS penalties for making that conversion if you do have a 401k. The other consideration is that if you recently sold a property or about to sell a property, we can white glove your 1031 exchange process, and we can allow you to reinvest those proceeds into this deal, deferring any of your capital gains. Now, in terms of investor returns, let's start with Class A. This offers a 10% preferred fixed return to those investors. So, for example, if you invest $100,000, you'd receive $10,000 in quarterly distributions each year while we hold the asset. And upon sale, you'd receive any unpaid pref and your initial capital back. Now, this class is considered to be the lowest risk of the 3 classes, as Class A investors get paid their preferred returns before Class B and C investors do. Now, the trade-off with this is that Class A investors do not get to participate in any of the future profits that the property might appreciate in value when we sell it. Now, the final thing I would like to mention about Class A is that we project to be paying all Class A investors out at or near the end of year 3, which could help shorten the timeline for some people to some of those investors. Now, in terms of Class B, this is your common equity class, and we're offering a 7% preferred return with a 70-30 split on profits once we sell. So 70% goes to you guys as investors, 30% comes to us as sponsors. Now, from a cash flow perspective, we anticipate that the cash on cash return to be a little bit lower in the first year, roughly around 1%, but it will dramatically jump once we start to improve the property over the hold. So less consistent overall cash flow compared to Class A, but of course you get the same, you get to share in 70-30% of profits once we sell, which obviously really boosts your overall return to just be a little bit under doubling your money in 5 years. Finally, we have Class C investors who opt to invest a minimum of $500,000 or more. Now, for investing a larger amount, we are offering better return metrics compared to Class B. It's the same in the capital stack position would just better return. So Class C has an 8% pref and a 75-25 split on the back end instead of a 70-30 split. Now, lastly, I will note that these returns are inclusive of all fees. We cut out junk fees, and generally we have some of the lowest fees in the industry. Now, as an operator, we see a return on the investment based on. You guys will see that return on investment based on the profit splits at the end that I just mentioned before. This is purely performance based. So, i.e., when the asset sells, RSN gets to profit alongside of you guys. So we are highly motivated to make sure that this deal is a massive success. Now, we realize some of these return metrics may be a little bit confusing, and we try to be obviously as comprehensive as possible and helpful, but we don't want to scare you off either. So if any of this doesn't make sense to you, or please don't be shy. If you have additional questions, please reach out to us and we'll be happy to jump on a one-on-one call with you to make sure it's totally clear. Ben, do you want to talk a little bit about tax benefits?
Sure.
You love that.
For some reason I do. But look, of course, investing in real estate has tax benefits, and we'll be taking advantage of regular depreciation, bonus depreciation, and we'll be performing a cost seg on this property. We'll actually probably perform more than one in different years, all with the intention of maximizing the tax benefits that flow down to investors on your yearly K1 forms. We typically see 50 to 60% of each investor's initial investment returned as passive losses in year one. And these passive losses can be used to offset passive income from this investment or any other investments you hold. Any unused passive losses can be rolled over the next year. And in some cases, these passive losses can be used to offset ordinary W-2 income. Most investors typically see these passive losses offsetting their distributions from this investment, meaning the full distribution amount stays in your pocket rather than going to the IRS. As we always say, though, please consult with your CPA. Taxes are complicated and everyone's situation is different. With that, we're going to talk about the next steps here. So now you have a solid overview of RSN and this investment opportunity. So let's talk about timelines. Now, we have the PPM ready to sign right now. So if you're ready to go, we are ready to go. And we are accepting wires on a first come, first serve basis right now with a funding deadline currently of March 21st. And we're probably going to push that back a little bit because we've got a little bit more time on this property. But long story short, it is first come, first serve. So please show any interest early and we'll make sure we can get you in or give you deadlines that you need to hit. And look, if you're anxious about securing your allocation, you want to do it now while you're watching this webinar, go to rsnpropertygroup.com/commit, and your timestamp on your submission will govern your priority in the queue. Now, with that all said, we're going to do a little bit of a summary here. And we're going to distill all the major points that we've covered into the core elements of the offering. And we started off by making the point that this is a generational buying opportunity. We think that people are going to be looking back in the next few years and saying, wow, it was a really great time to invest in multifamily. I wish I bought more. And we are, living that. We're actively going out and acquiring as many assets as we can, using as much of our own time, effort, and money to bolster our own portfolios, our investors' portfolios. And we think it's going to be a great move in the years to come. The deal itself, we're getting it at an incredible basis at 160K a unit, representing a 34% discount to market and a 65% discount based on price per square foot. We're in the premium high growth Atlanta market. It's obviously projected to produce the excellent returns we talked about. It is completely passive. You sit back, read the monthly reports, watch the quarterly cash flow roll in, and then you enjoy a lump sum payout when we sell in 3 to 5 years. And keep in mind that throughout this hold, you will have direct access to the team. So Patrice will be there to help you with any matters that come up. And Reed and myself here, only a call or an email away, you'll have direct access to us. Our track record. We have a long, successful track record, and we've successfully operated value-add and core plus assets, never losing a cent of investor money. We're always aiming to double investor money in 5 years, but historical returns have actually been near a 27% annualized. We like to under-promise and over-deliver. Now, we talked about RSN and our 10 years in operation, and we execute the same 3R value-add business plan. We've done that across 27 assets. We've gotten very good at it, and we're constantly improving. We covered our methodological approach to sourcing deals. selecting markets, sub-markets, property criteria. We start by targeting the best investment markets. Then we target very specific property types that align perfectly with our investment strategy. And even then, we're going to underwrite over 500 deals and only transact on the very best 3 to 5. We covered our conservatism in underwriting and deal structuring, everything from our conservative assumptions, our conservative business plan, fixed rate debt, and of course our low fees and performance-based remuneration, i.e. we only get paid when the deal is a huge success. And from an investment return point of view, we covered the 3 tiers of investment classes, outlining how each one works and may fit with your personal investment goals. We have low $50,000 minimum investment amounts. We can help you with your 401k or self-directed IRA investments. We can help you with 1031 exchanges. The regular quarterly distributions are going to hit your bank account and be offset by the tax benefits. And all of those tax benefits are going to flow down to the tune of 50 to 60% of your initial investment coming through as passive losses. And with that, again, if you want to invest, head on over to rsnpropertygroup.com/commit. And if you're not ready to register your investment yet, get in touch with us. If you're on your desktop computer, scan the QR code and schedule a meeting with Willie. Go to the URL there, rsnpropertygroup.com/call, or just give him a call or an email. And with that, that's a mouthful. I know we've covered a lot there. Let's jump into some live Q&A if we have any. Otherwise, I think Christian's going to maybe throw a couple of questions at us.
Yeah, so I'll just open this up and say, if you do have questions and answers, you as guests are the priority. So just type them in or raise your hand and I can give you the opportunity to even speak directly with the team here. But I have a personal question, first of all, which is just, how do you guys do it? I mean, you guys are clearly nationwide. I think you both live on different sides of the country, maybe even worldwide in the way that you guys run your business. How do you keep everything in order? And what are the things that you have in place to run such a great, business?
Well, I want to take the first stab at that, then pass it over to Reed. So interestingly enough, we mentioned I come from a tech background. And so I was spending my entire career, even before I was really, doing like a lot of deep tech work. We were working with people in London. We were working with people in Singapore. I was working with my team that was located all around the country. So I already had the working patterns established to, utilize Google Docs, to utilize Zoom, to utilize everything. COVID hit and everyone was talking about working from home. And I was like, guys, I've been doing this for 10 years. So we built a lot of that into the way that we operate at RSN. So our infrastructure really, really supports working from a lot of locations, which provides a lot of synergies. But also, like, I can personally be in the back of an Uber and I'm on Zooms, I'm connected to the company drive, I'm connected to, everything that I need. So just from the logistics of being a remote company, we see a lot of benefits to being able to get stuff done. And then, I don't know, Reed, do you want to take it a step further than the basic logistics there?
Yeah. So, just to rewind about how we started, right? I live in Los Angeles. My wife's from Los Angeles. But, 10 years ago, when we got into this business, we were looking at markets which had better cap rates than Los Angeles. It was a very compressed market, still is a very compressed market. And so naturally you look at more affordable markets, right? Like Central Texas. And my first deal that I did as a lead sponsor was in 2014, 2015 in San Antonio. You build systems, you build local boots on the ground with local property management. You have ways of checking in. Now, I've come from a ground up development background. My background's in structural engineering. I've worked for many big companies across the globe. So I come from an institutional world of how to manage ground up construction projects. And it's, we're buying existing assets and we're making them better. So through that experience, and as I mentioned earlier, we every market we go into, we build out 700 to 1,000 units to get that economies of scale, and then we move on to the next market. So, this hasn't been an overnight success, Christian. It's happened methodically over time. We built out stuff in Central Texas. We then moved into Phoenix, Arizona. We then moved into Greenville, South Carolina. We then moved into Atlanta. So we've methodically taken our time doing that. We've done 27 deals over the last 10 years. That's only a bit over 2.5 deals a year. So we look at a lot of deals. We make sure when we execute, we're solely focused on a deal this deal right now, getting it closed and getting it up and operational. But over time and through both of our backgrounds, we can manage teams remotely, which is the benefits of what we do in multifamily. And the thing is, it's very similar. workforce housing looks and smells the same in Central Texas as it does in Phoenix, as it does in Atlanta. And you've got to look at the same same metrics. What's the average household income? What's the demographics look like? Are rents going up? Are you in a market where the population is growing? And that's all been a benefit to us over the last sort of 10 to 15 years as more technology has come into the space. So that's helped us do our job more efficiently and with more precision. So hopefully that answers your question.
Yeah, absolutely. And again, just have so much respect for what you guys have built there. Now, oftentimes when somebody is looking to invest passively, it's because they don't want to take on the full-time job of running and managing real estate, but oftentimes they still want to be a part of the action. They want to know what's going on. Can you speak a little bit to what they can expect as far as reporting and what they will actually get to see of how the operations are being run along the length of their investment?
Sure. Yeah. So we do monthly emails to just sort of a snapshot, half a dozen to a dozen bullet points on the operations. We have a very standardized KPI table that shows probably about a dozen different KPIs we like to track month over month. And that just gives a general sense of what's going on with the property month in, month out. And then at the end of every quarter, we do a deep dive financial analysis, which will then, in the infancies of a project, you'll do a quarter-on-quarter comparison. As you get further, a couple of years into the project, you'll then look at year-on-year growth. And then we'll compare everything to our pro forma, market trends, how much traffic we've had on site, how's the occupancy going, the good, the bad, the ugly. We are very down to earth in our approach of how we like to present to investors. We don't like to sugarcoat anything. And we'll call a spade a spade. So we've, again, systemized that really well as well. And we think it's a great strength of ours. And we get communications out on the 20th of each month.
All right, that makes a lot of sense. One other thing that stuck out to me is that you guys pass along not only profits accordingly, but tax benefits accordingly. One thing I wasn't clear on is, are there any tax benefits for that Class A share, or is it standard 10% without any tax benefits?
No, I'll speak to that one. And we are one of the few operators that we're aware of that provides the tax benefits on the Class A style of investment. So you do get that 10%, but you will also get the tax benefits as well. So that 10% distribution will fundamentally stay in your pocket as well. So yeah, that's how we structure it. Everyone gets those tax benefits except us as operators.
Got it. Very cool. Well, I mean, it looks like you guys have such a great project here. It echoes what I've seen in the last few projects. Congratulations on your upcoming closing on the most recent transaction, and then this one that's coming up as well. If there's no further questions, I can let you guys leave unless you have any further insights that you want to add for folks.
Yeah, also just huge thanks to everything you do on your platform, Christian, and big thank you to everyone who turned up tonight. And if you're watching the webinar, again, please don't hesitate to reach out to us. If you have any questions, you're interested, again, we're closing at the end of April, so there's still plenty of time to get your investment in here. The PPM is ready to rock and roll on our portal. So if you are interested and you want to learn a little bit more about us, please reach out. We can have that one-on-one conversation, and then hopefully we can take you into the next step of investing alongside of us.
Right. And I'll basically say the same thing. You guys are part of the PREIshare network, but if you want to become part of the RSN network, express some interest and you'll start to get access to our deals. And, we'd love to have you on board. That's it from me. Thank you so much, guys.
Thank you.
Thanks, everybody.